Okay, penny stock billionaires, welcome back. It's beautiful Friday, 1 o'clock, and it's moon momentum time. It's amazing. The market has had a massive turnaround the last couple of days. So, I was doing a live stream, Wednesday, just a number of days ago, and things looked terrible. The NASDAQ looked like it was going to break through that moving average. Things were just really breaking down. Sure enough, complete turnaround, a reverse rug pull, and I'll tell you what, it's quite ironic. I was talking about capitulation. The market needed capitulation, and it's very possible that what you saw on that live stream was capitulation from me, because I was saying, hey, it looks like it's going to have another leg down, and in fact, if you're looking at this chart right now, the NASDAQ, it didn't break down. It didn't go below that moving average. You see that the last red bar, I'm using the candlesticks. It didn't break down. Again, that's the lesson. You really have to kind of go with these moving averages. Until it breaks down below it or above it, the trend is really not there. So it could test it. And that's kind of the tricky thing. But look at that. It's had a massive bounce. Now, it's still possible. It is still possible there could be a fake out, just like we saw, back May 14th. And this is what I talked about. But things are kind of interesting right now. I think, what's happening here is not only did it, I'll tell you what, I'm looking at this and it's different than the May 14th situation and the one back in December. And the difference is this. You had a breakout above that 50-day moving average, and then almost a retest of it. Like, on the 26th of July, this day I'm pointing on the chart, it almost touched the moving average. And then the next day it had this very strong bounce, massive move the last couple of days. It's slowing down a little bit, but let's look at some of these stocks that are exploding right now. It's the mega cap stocks. The mega cap stocks are all exploding. GazX, former one of our stocks. We'll take a look at that in a second. Look, let's take a look at some of these moving stocks. Let me just change up the banner below. Okay, so here's the thing. You got to kind of look what's happening in the market right now. There's a couple of these mega caps that are taking off. I'm looking at some of our penny stocks, some of the big winners over the last few years that had massive runs. They've all double bottomed. A lot of them double, and some of them are taking off right now. I mean, look at this Red Light Holland, right? TRUFF, psychedelics company, right? You had this double bottom here, break it above the moving average. Now, is it for real? I don't know. I mean, like, it's a little disappointing that they're not taking advantage of it. I mean, I mean, they should be capitalizing on it, but you don't hear from these guys. That's them. Also, let's take a look at Skylight, another one of our previous winners. That one, it looks like a double bottom, breaking out above the moving average a little bit. Even Liquid Avatar, I'm looking here. Look at this. I mean, break it above the moving. So things are, picking up a little bit in some of those stocks, which I think is going to be quite good. Let's take a look at another stock that's on the move right now. XTM, paid in Canada, breaking out above the moving average right now. New Ran, which I think could be one of the big winners, one of our super stocks. This is a pretty interesting chart. I mean, look at this. We got a breakout above this moving average. Very, very strong. Very strong. Great fundamental news flow. I mean, the news flow in the last few weeks has been amazing. We got to get them back onto the program. I don't know. These guys have been hibernating or something. I think they're waiting to have some really incredible news before they come back on. But I mean, the news flow has been very strong. They had a $100 million contract with Sudan. I mean, big. I mean, 100 million over 10 years. So, but still, 10 million a year. You add these up, 10 million a year for this, 10 million for that. All of a sudden, it adds up to real money. So these guys are executing. They are doing what they said they would do. It's taking longer. Hey, that's the way it works. That's the way it works in the microcaps. You know, it's funny. You know, the other day, I think Newrand's chart is fucking amazing. Mike, I look at the Newrand chart is, you know, I mean, you had this big consolidation and now you had a breakout above the moving average. And now let's see if it sticks. Let me draw a trend line here. Let me draw a trend line and then I'll go back to Tesla, Microsoft, Google, because that's where the action is right now. So I'm going to draw this trend line here in green, and so you got a couple things. You got so this is the main one. We broke out of that trend line, right? And you used it as a support line. So what other? Yeah, it's kind of hard to really get it right because there's just these little spikes. But yeah, here's the thing. I don't see any. Yeah, there might be some resistance like in the $1.50 range. I could see that. I could see some resistance coming up at $1.50. But I think we got a pretty clear path right now to $1.50. I don't see anything, or not even $1, maybe like $1.60. Yeah, that's right. Yeah, I would say I think Newrand could make a run. You know, could make a run to $1.60. There's a vacuum. There's a vacuum. I'm not saying it's going there because, by the way, yeah, the Canadian regulations prevent me. I am banned from saying that stocks have a potential. You know, it's a nanny state. So what I can say is there is a vacuum base. Look, there's a vacuum in the market. Look at this chart. It's pretty obvious. There's a vacuum. There's no real, you know, resistance up until about $1.60. That's what it looks like right now. The moving averages are confirming that we are, in fact, breaking out into a new uptrend. That is what the confirmation is. Okay, so, and by the way, what else is? So we're going to talk about NEXCF. NEXCF is this the NEXCF chart? Yeah. Is this? I don't even know. I got so many things. No. This is the problem. These Yahoo, they got to fix this thing. But yeah, the NEXCF trend lines are even more amazing. I'll talk about that in a little bit. There's really very little. The key number we're going to be looking at on NEXCF is about 82 cents. Once this thing breaks out of 82 cents, the next level of resistance is $1.25, which we hit 2 weeks ago. After $1.25, there's no resistance to like $2.53. So there's like an air pocket, no man's land. You know, it's like, you know, once, you know, it's like, you know, once let me give you a metaphor. Yeah, it's like a no man's. It's basically, it's like free. It's you know, once you break out of that, you can go to $253 very, very quickly because there's no resistance. I'm not saying it's going there. I'm not making price projections. I'm just saying that there is no resistance up until those levels, and we got some amazing setups here. All right, so let's take a look at. Here's, I think, the big story. Here is the big story. Look what's happening with the mega caps right now, which leads me to believe that we might have seen the market correction being over because people have been so you know, with all the pessimism, all this negativity. You know, I really was expecting the market to go much lower because it really, you know, but the thing is, sometimes it just doesn't happen. Sometimes it just doesn't go lower. It's almost like 2020. You know, March of 2020, I really thought, okay, it's got to go much lower still. And no, it stopped. It was like that. That was it. So it could be, you know, it could be we have a new bull market starting right now. Let's take a look at Google. Look, we're above the moving average. You know, and here's what's clever. These fucking idiots, these big tech companies, finally, they woke up to the fact that you got to split these stocks. You know, these guys became such snobs in the last 10 years. Oh, we're going to have $1,000 stock, a $2,000 stock. Oh, yeah, because we're like, you know, we don't need the little people. Listen, you got to keep these things cheap and cheerful. You got to keep these stocks like, you know, under $200. Psychologically, it's very important. And not this Warren like this con man Warren Buffett. You know, you got to have stocks which the average person can access, and it's very smart. And as always, you know, it's a well-known thing. Once stocks split, they always go back to the old number. So look, this, you know, Google is one of the great monopolies of our age. I mean, they are the great monopoly of hang on, of search. What is going on? Uh-oh, my thing is frozen. They're a monopoly of search, right? So that's it. So I think, you know, Google is, you know, you had this retracement. Let's take a look at the retracement. So if you look, okay, so let's call it from 52 to 150, and now almost not. You had basically a 30% retracement. You know, that's when you have a big uptrend, that makes sense. Could take off from here. That's what it looks like. How about Microsoft? Wow. I mean, this is really powerful. This Microsoft is an amazing, look at this. Super, super powerful breakout. Let's draw a trend line. Can it go from here? Wrong one. Okay, so I would say that. Okay, so if this thing breaks out of 283, let's say, let's call it 283, this is going to moon. I mean, Microsoft is going to moon. I'm like I sound like I'm promoting a penny stock, but Microsoft could moon if it breaks 283. It's such a powerful uptrend. I mean, this is a wow. Look at this, amazing. You know, it just. I'm gonna make a note of this. Microsoft 283. If we manage to break 283. It's going to go to Mars. Very powerful. I mean, incredible. The action of the last 3 trading days with all this market negativity. There's your weekly chart. I mean, it's the momentum. The momentum is there, you know. There we go. Let's see. Why is NEXCF not moving higher already? Okay, I'm going to go to the NEXCF chart. It's a great question. Very simple. You know, the stock, you know, the market is forward looking, right? So the stock got ahead of itself, right? It tripled in a month. It's got to digest. You can't have a stock that's going to go from, you know, 35 cents to $3 in, you know, in a week. That doesn't happen. You know, first it goes to $1, then it corrects, shakes out all the weak hands, consolidates, makes the next leg up, corrects, shakes people out. The markets shake people out on the way to the top. By the way, just to be clear, I'm not making any projections. I'm not saying NEXCF is going to go to $15, $10. I'm not making any price projections. I'm just talking about, you know, support resistance lines, where things are, and the reality of the markets. But listen, right now, we're going to go talk about NEXCF in a little bit. I think we're getting in a very good setup for this thing to make a substantial move. Okay, a substantial move. I'm not making any price projections. I'm just saying that we could have a very strong breakout. This is like physics. It's pure science. This is not like, you know, me making shit up. This is like the reality of math. You cannot, you know. How about Tesla? Let's take a look at Tesla. These trend lines are crazy here. Okay, so let's go to the daily chart. Look, you know, we're above the moving average. And it's been that way for how many days? 1, 2, 3, 6, 10 days. And the gap is widening between the 50 and where the price is now. I mean, the stock is the trend is back on. Let's see. There is some resistance coming up. I would say, okay, so there's probably a little bit of resistance, like 1,000, at around 1,000 or so, maybe 900. There could be a little bit of resistance coming up in that kind of, yeah, about 1,000, 980. So, if you're like a momentum trader, you might have about $100 of like, yeah, I mean, it could easily, there's not a lot of resistance here. Really not. So, I mean, you could have a nice move. The market's in a really good setup right now. I mean, it really has had a very strong turnaround. Even, they raised the rates and the market is still up. It's crazy. What is, the market's forward looking. So maybe, obviously the big thing that everybody's saying, oh, they're going to be cutting rates. They're going to stop raising rates. They're going to cut rates in 23. It's look at this. So the market is looking forward by how many months? 6 months right now. So the market is looking forward by 6 months because we're in what? August, September, October, November, December, January. 6 months. So if they do cut rates in January, that's what the market is telling you, I guess, right? That you can't really overthink these things. You kind of have to it's a very it's a very counterintuitive. Okay, so Tesla, we talked. Tesla's looking good. Microsoft, Google. How about Amazon? Amazon, which we want to make sure that Amazon is healthy because what's good for Amazon is good for NEXCF. In many ways, I'm not saying anything, but okay. So look at this gap up. Look at this gap up today. You don't see these types of things happening in a bear market. I mean, and also very, very smart that they also split the stock, making it accessible for the retail investor. So we got this nice gap up from this breakout. I hate these candlestick charts. Let me get out of it. Yeah, I mean, so we're really separating away from that moving average. It's actually starting to turn up now. The trend is starting to turn up. So things are kind of, ironically, they also did that split, right? So last month they did that split. So things are really lining up. I'll be honest, I don't like the Amazon chart as much as the Microsoft. Microsoft has the best looking chart. The Microsoft chart is an amazing chart. I mean, like this thing just wants to go to the moon. Speaking of moon, let's take a look at AMC for a second, and then we'll go to NEXCF. AMC is managing to hold on. I mean, I thought it was going to break down. It didn't. It's held on to this moving average. It's on the ropes. It's on the ropes, but it hasn't fallen off. What about Cathie Woods? Cathie Woods has been a little bit derailed. It's a little bit on the ropes. It's on that 50 moving average ropes. It's been derailed. Okay, let's look at the main event here. Let's talk about stocks where you can make real money, right? I'm not giving any advice or anything, but listen, we all know that NEXCF has been a market champion. Okay, it's not it doesn't take a genius to know what's been going on with the stock. I mean, this has been a champion performer. We got involved in NEXCF. What was it, 3-year anniversary? It's our 3-year anniversary almost. Yeah, it was 50 cents or whatever it was, 50 cents back in August 2019. When it broke out above the moving average, watch that moving average. It broke out above that 50. It went from 67 cents to $2.60, I believe, right? So a 4x move. Okay. Again, this was your sell signal over here. Breaking out again at $1.30. And when it broke from $1.30, it went to $10. These are the Canadian prices, right? So, substantial moves. I mean, this stock, when it runs, right? And, look, it's been below the moving average for the last year, for a year. And now, for the first time, There were a couple of fake outs. But now we're above the moving average this is the longest it's been above the 50 moving average in over a year. Okay, that tells you something. That's the market is telling you something, right? The stock is telling you something. And I would pay attention to it, because forget about what I'm telling you, whatever. My opinions do not matter. Like, this is all just nonsense. That moving average, that trend line tells you black and white what is going on. And when a stock, if NEXCF, if somebody should do the math on this, because there's probably like because look, does anybody know about the turtles? The turtles. Thank you, Corey. The turtles. I'll tell you about the turtles next. Support 65. Is it going to go to 6? I don't think it's. I see what you're looking at. Yeah, you're looking at that moving average. Yeah, you're looking at that. Yeah, 60. It's really 67, but yeah, 65. Yeah. Could it go there? It could. Anything can happen. I don't think so. I think if you look at the 4-hour chart right now, we just broke below it. Oof. We're below it right now. Yes, we're a little bit below it. So technically on the 4-hour, this is a sell signal on the 4-hour chart. But yeah, it could go to 76. It could go to, it's the 60. It's possible. Let me see the 1-hour. Yeah, we're still. But here's the thing: if you zoom in on the short term, because again, if this thing turns around in the short term, it's going to throw the whole thing upside down, right? So if you look at the 1-hour chart, you get this double bottom here, right? And it's building a base for the last 8 days. 8 days it's been building a base. And you can see you got support over here going back to last June. So you have this long base. In this like 78-cent range. 82 cents is really the big resistance on all the charts. So if we can break out of this 82 cents, this thing could really explode. I mean, really explode. Okay, so again, same thing here on the 30-minute chart. You get 83. Let's zoom in 15-minute. Also, 81 is the moving average. So this thing is looking for. It's been resting again. You have a stock that went from 30 cents, 34 cents to $1.30, basically $1.32. There's a triple in 30 days, basically. In order to sustain that type of move, in order to have that sustainable, in order to be able to maintain that type of move, the stock needs to consolidate. It needs to shake out some of the weak hands and then start moving again. Because whenever you see these things just go parabolic, those things are not sustainable. I mean, in this market, you're not going to have these parabolic. We're just not in that type of market where you can have crazy parabolic moves where stocks just go, 5x in 5 days. Those days were, 18 months ago. It's not happening right now. It may happen. I think it will in about 6 months. But we're in a normal market environment. So once a stock breaks out, it consolidates. And this is the period we're in right now. Right now, we're in the period where you have the bulls and bears fighting it out. They're fighting it out because they're fighting it out. Why are they fighting it out? They're fighting it out because that's what happens. Because they're not sure, right? We know what the bull case is for NEXCF. We know the bullish case. Okay. But there's also doubters. There's people who are taking profits. I mean, if you bought NEXCF at 30 cents and went to $1.30, I mean, quite frankly, the smart thing to do would have been to sell, a big piece of your position. In this type of market, if you can make that type of money in 30 days, you want to cash out, take some money, move it into the next deal. I don't blame those people because, at this point they can buy back in. They can buy back in once it's on back to the support lines. And the idea is you want to keep, compounding. You want to keep parlaying these gains. look, there's stocks that have go up 100x. And we've actually had, it's funny, we've actually had a couple of stocks. I forgot about these guys, but because these were Wall Street Reporter client companies that were like, we did like CEO interviews, but they didn't do like the next super, they didn't do these big programs where it was like, consistent marketing. It was just like one-shot deals, like, CEO interview, introduced to investors, and that's it. And so, but two of those stocks ended up becoming 100 baggers. So we've had actually a couple of 100 baggers come out of Wall Street Reporter, many 100 baggers, I think. So the two I'm thinking of is Taser, which is now Axon, AXON. That was like $1, $2, $1 stock, $2. It went to $200. But it went up 10x, 20x a couple of times. The move to $200, that 100x, 200x move, that took 20 years. I mean, so nobody wants to wait 20 years for a big move. Another great one, which I totally forgot about, which was Rick's Cabaret. Rick's Cabaret. I just saw a tweet from the CEO. So Rick's Cabaret was one of the classic. I remember this. So Rick, take a look at this. I'm going to show you how the path to 100x. It's not an easy path. It's not a straight line. Rick's Cabaret. 1 week chart. This thing goes back so long. So Rick's Cabaret story stretches back. Oh my God, all the way to the mid 90s. So Rick's Cabaret, classic microcap story, right? It was on NASDAQ, but it was basically, the story was this guy had a strip club in Texas, I think Dallas or Houston, whatever it was, and they were going to take it public and do a chain of Rick's strip clubs and then consolidate this the strip club business, which is an interesting idea. I mean, like, because at that time in the 90s, you had all these roll-up plays, right? Like, you had Waste Management that was rolling up the garbage business, the sanitation, huge stock. You had a couple. Who else was doing There was a bunch of these consolidation things, and it's, what do those businesses have in common? Hey, a little bit, it was a mob business. I mean, the garbage business, or at least in New York, New Jersey area, was definitely the mob. I think it was always a little bit of a let's call it a questionable characters in that business, and you were never going to have VCs or private equity guys get involved in that. Same thing with strip clubs. I mean, strip clubs it was notorious to be it's a cash, or at least back then it was a cash business. The mob was definitely involved. The brokerage firm that took these guys public was, I remember this. because I remember when they went public. It was actually, I don't want to say that were they mob related. There definitely were guys in the mob. I think it was Baron Chase. So it was guys from like Stratton Oakmont that went to these companies, and like the mob got involved. I'm not saying the mob was involved in the Ricks. I'm not saying that at all. But the brokerage firm there were guys connected to the mob, and that was the problem because once that firm went bust, the stock lost all market support, and people thought, oh, it's a fugazi, it's a strip club business. Oh, it's this, it's that, And this stock was, 87, under $1 for many, many years. And it was under $1 for many years. I had a lot of doubters. And look at this. It went to $30 within a period of a couple of years, 30x. I think we did an interview with them back in, I think it was right around here. It was in the 90s. It was like 99 or 2000, somewhere back then. And then eventually, look at this. The stock went to $96. $96. So it was $1 stock. Or how about Axon? Nobody believed Axon either. I said I was completely wrong about this because I thought that was a fugazi, the Taser. I thought it was a whole complete bullshit thing. And I was dead wrong. It was a 50-cent stock. I think when we did the interview with them, it was like $1 or $2. I think it was like 2002 or something. I thought these guys were idiots. I mean, I'm the idiot for not buying it. Because that thing went to $200. But it took, look how many years. It took 20 years almost. So I think you're much better off, with our, the 10x strategy, the fast lane strategy. You make 10x with a stock, you get out, you parlay into the next deal. Sure, some things go up 50x. Oh, here we go. Mike Lennox. How are CBDT and VSBY looking? That's funny. Speaking of 50 baggers, CBDT, classic story. By the way, classic, Mike, I'm glad you bring this up. This is why you want to get out of a stock once it's up 10x. And this is the thing I talked about in one of the first chart live streams I did. Once something goes up 10x, you want to pull out all your principal, leave some money in it. Maybe it runs. It could run 50x. It could run to 100x, like CBDT did in this case. So yeah. So look at this. So here's a stock, which we got involved with at a nickel. It was 5 cents, and it went to 50 cents. Look, the story at the time, I think, made a lot of sense. Where definitely it could have traded at 50 cents, maybe even $1. They definitely had a story that could support that stock, but then the market went crazy. So the market went completely crazy, like where people just, it was just the stocks, like it was almost like the thing was going, it was like the fire was going, but then somebody just tossed like a trailer load of gasoline. It was just a market mania where things just went crazy. And the thing went to 250 like overnight. In like how many days? Look, from February 12th to February, in 10 days, it went up, 5x in 10 days. Is that sustainable? You don't want to see that type of thing happen, right? And I think the stock could have stabilized there. I really do believe it could have stabilized. And I've talked about the reasons why it could have and it didn't. I'm not going to go into that. But look, we've been out of it for basically since here. Our contract was over, and the company basically said, hey, we're not gonna, we don't need to talk about the story. We're gonna kind of go into hibernation or whatever. So, and this is what happened. So anyway, where is it now? It's at a nickel. It's back to a nickel, back to where it started, I don't know. I don't know what's going on with them now. VSBY, same thing with VSBY, very similar. What the fuck was it? That guy was such what a moron. I mean, really. This financing that they did is very questionable. Great story. I mean, this is the type of story where if it was properly promoted, could have been a $3 stock. This could have been a $3 stock. And I'll tell you why. It could have been a $3 stock. This is why I'm so pissed off at VSBY, is because, and again, one of their technologies is this, what do you call this thing where you can, AI, security AI technology, where, you can track, and this could have stopped a lot of these mass shootings. Because if you had their AI system, the cameras and a perimeter or whatever, it could have spotted these guys coming in, right? That absolutely could have stopped it. I don't know, possibly, but I think you know what? Look, you've had an epidemic of mass shootings. I can't even keep track how many mass shootings there've been in the last 6 months. It's like crazy because it's not guns. It's not about guns. I'm all for guns. People should have a right to own guns to protect themselves. It's a problem of mental health. I mean, you have who's doing it? Who's doing all these shootings? It's young guys who are just like, they're not getting laid. They're like, they don't have jobs. They're like, they're misfits. They're sitting at home playing video games. They're, I don't know. They're probably, they're all probably, I don't know, going to Joe Biden and Antifa rallies or whatever, Bernie Sanders. That's who it is. That's your mainstream kind of mass shooter mentality. It's people who are kind of lost. They're really lost. They're not productive people. And I think that, if our society had, we gave people, people didn't have, free money thrown at them by the government where they had to work, you wouldn't have mass shootings. I mean, in the 1950s, did they have mass shootings? No. In the 60s, no. When did these mass shootings start? When people have nothing to do all day. They have nothing to do, so they have to, people go crazy. And also, let's not forget the whole COVID thing, right? People are locked up for 2 years, masks, everything else. There's consequences of those type of things. Human beings are social animals. Anyway, look, I'm not going to go into the whole psychology. Anyway, bottom line is, if Jay would have been out there promoting their AI security technology on talk shows, TV, whatever it is, massive, it would have been a pure play on this, like how to stop it. The stock would have been $3. And why hasn't he been doing it? I think he's incompetent. I mean, he should not be. Maybe he should not be the guy. They should either have the chairman promoting the stock, or maybe he could be a chief operating guy, marketing guy. I don't know. But the job of a public company CEO is to promote the stock. That's their job. Make the shareholders rich. That is the job. Create shareholder value. Make the shareholders rich. Why do you think these CEOs get fired from Yahoo or all these companies? Because the stocks are not going up. That's why they replace the CEOs. So if the CEO is not making the stock go up, he should be replaced. Big companies are doing it, but the board of directors at these like microcaps, they're all corrupt. They're all like, it's just a bunch of. Look, I'm hoping that VSBY comes back. I think it probably will come back, but VSBY is not going to be. I don't see VSBY becoming like a Axon, like a Taser. These other guys, it's not going to be 100. It's not going to be one of these 100 baggers. I mean, it might come back to $1.50, whatever, and that'll probably be their last hurrah. We'll see. Maybe I'll be eating my words. I don't know. I own stock. I own shares. I'm kind of stuck with it for now. I should have gotten out. But you know what? I didn't, because I thought it was going to keep going for it. Look, it really could have broken out when it was at $1.50 in this level. It was really primed to explode. I think it's just the Jay dropped the ball. He stopped promoting his stock. I completely blame it on him. 100%. He's like the guy from CBDT. Stop promoting. That's what happens. Or Skylight, another winner. The guy was all over promoting the stock. The stock ran up. As soon as he was on NASDAQ, I don't need the investors anymore. And there he is now, back at 80 cents. A disgrace to all of Canada. I mean, what a shame. I mean, this guy was like, I only talk about some of these stocks because I have high expectations of them. If I don't have the stocks that you don't hear me talking about are the ones those are the ones you should be worried about, because I don't think they're ever going to come back. This guy Pratt, this guy could have been a superstar. I mean, he really had the story. I mean, on the surface, the guy could have been a superstar. But we see now, it's a shame. It's a real shame. Unlike, and here's these markets. This is like, what Warren Buffett says: when the tide goes out, you can see who was swimming naked, right? Like, who's the real guy and who's the pretender. These CEOs who go on and promote their stocks in a bull market. Everybody does that, right? But when things are down and they're still showing up, they're still putting out news, they're still out there. Those are the champions. Those are the guys who are going to come back bigger and better than ever. NEXCF has been out there forever, consistent, out there every day. So the NEXCF chart. I'm sorry, I got distracted. One of these questions distracted. Anyway, just like that CBDT chart, I showed that to you. You don't want to see that happening with NEXCF. I mean, you don't want to see that type of where it goes up 5x in 5 days. I mean, if this thing would have gone from 30 cents to $3, like in 3 days, it would have been unsustainable. Right now, you're seeing a very normal market situation where the bulls and bears at this point, they're kind of fighting it out because the stock went up and now people are kind of digesting. They're saying, well, can this thing become a TenBagger from here? Can this thing go to $10 again? Is this AR thing for real? 3D models, do they have these contracts? Because some people are saying, oh, maybe they don't have the contracts. Maybe they're not going to get these deals. Maybe this is whatever. The bullish case is that the 3D modeling business that the NEXCF has, I mean, they're a leader in that business. And the whole $5 trillion e-commerce industry, is shifting to these 3D product models. It's like what you're seeing now, these JPEGs, GIFs, when you go online for e-commerce, that's going to become obsolete. We're going to see 3D products, the thing in 3D, AR, everything. That's the next thing. I mean, that's where the technology is going. I know you don't believe it, but you know what? I remember when, I was working for a tech company, and the guy told me, yeah, and we had phones, we had cell phones that were it was like a brick cell phone. This is like 1995. Maybe I'm dating myself. And the guy said, oh yeah, wait, you're going to see there's going to be this thing called the internet with email, and it's going to be on the phone, and there's going to be a camera in the phone, and you're going to be able to take. I was like, who wants a camera in a phone? And the internet, I don't even know what the internet, there was no internet. I mean, this is like email. I think there was just some rudimentary, like, I remember AOL, like you had these AOL.com was a thing, but there was no like email, no web, nothing. Sure enough, this is a 4-year-old Samsung phone. Maybe I got to update. But yeah, so just like that all changed. Just like, we thought, oh, who needs cameras on a phone? Who needs that? That's stupid. I don't want to have a camera on my phone. Same thing as with this. It's people say, oh, 3D product photos online. Who needs that? Well, you're gonna see it because it increases sales, decreases product returns. The whole $5 trillion with a T dollar e-commerce industry is shifting to 3D product models, and NEXCF is a leader in that space, right? So you're going to see news coming out of them. I think they're on the cusp of some major things you're going to be hearing about. We're starting to see some things. I mean, look, they can't use some of the names, these big names, in press releases yet, but I think people are starting to figure out who these names are, and it's not bullshit. This is not like some hype. They get some real names taking on their 3D stuff, and once it clicks, once the market really understands, and then, by the way, this stock is not even mainstream yet. Nobody knows about NEXCF. I mean, like, even though we see the stock triple, nobody knows about this outside of like a small micro cap universe. Once you see some traction, things could really explode, just like what you saw happen in 2020. What you saw happen in 2020 with NEXCF, when that stock ran from, $1 from 50 cents to $10. This move over here, this was because the company hit an inflection point and was experiencing massive growth. Now, that massive growth was in that live streaming business of sort of the Zoom business because of the pandemic, right? So that business was never going to really become a massive. I mean, we thought it was, but things are going back to normal. This thing though is sustainable. 3D product images, AR for e-commerce is, e-commerce is not going away, and they're constantly looking to make things, improve the customer experience. So things are pretty impressive. And again, here's the other thing I say. You guys all know my theory, which is that stocks tend to return to their old highs for a number of reasons. One of them is, the path has been paved before. So once stocks gain traction, it reignites things, and people say, wow, it did it before, it could do it again. So we know that NEXCF was $10 before. And, we know it's been $10 before. So I think it's much easier for that type of stock to go to $10 again. And nobody believed nobody believed this thing could go to $10 back then. Nobody. And it happened. And right now, nobody believes it's going to happen, which is the same exact setup that we saw back then. You get it? Okay, so anyway, we're in a very interesting position here. So I think next week is going to be a key point to watch, where if we can break out of this 82-cent range, the next level of resistance is $1.30. I said $1.25. I was wrong. It's about, no, I'm sorry. No, it is $1.25. It's about $1.25. And after that, There's really no here, let me show you. Let me just show you this. Let me show you the resistance lines in NEXCF. And I'll answer. I saw a couple of people were asking about PKK. PKK, was somebody asking about that? I don't know. I don't know. ESC. So ESC RH, yeah, their contracts have been up, and we haven't heard anything from them. They've been MI. Oh, actually, no. RHT has been delivering news flow. They're, Lisa's doing her thing. ESC is kind of guy's gone into hibernation. Big talker, and now he's gone into hibernation. It's kind of disappointing because I think I kind of feel Conrad had the potential to become a superstar, just like Pratt. I mean, I think those two guys could have been superstars, like really. But that's what happens a lot of times. You think somebody's going to be a superstar, and then they fizzle out. The market. The market realities. The market realities separate the men from the boys. That's just the way it is, my friends. Okay. There we go. There you go. That's one. Okay. Okay, so there you go. Those are the major. Maybe you might want to do another one here. Okay. These trend lines are a little bit crazy, but they are a legitimate trend line. They are actually pretty legitimate, but they're not as relevant. But what you're seeing here is the main idea. This is the main idea I want to tell you. If we break out of this 83-cent range and then $1.30, it just needs to clear this $1.30 range. And when you clear that, there's no resistance till about $3, $2.50. You're really $3. And after that, it's like home free. You got the resistance of $3. But if NEXCF breaks out of $3, I don't want to sound like I'm pumping the stock, but if NEXCF manages to break out of $3, we could see some crazy numbers. I mean, and by the way, I'm not saying these are not price projections or anything. Don't take this the wrong way, but the next level is 750. 750. It makes a lot of sense. Yes, 750. So I would say, and this is the way these things work. It's like these stocks have nothing to do with fundamentals, with reality. Yeah, sorry about that. Okay, NEXCF chart. Sorry, I was in the way. I only have one screen, so I can't really see what's going on. So, yeah, you want to see the chart, not me, right? So, here's what I'm trying to show you, and I've been saying this for a while. Key support. We're bouncing off the support here. You got support in the 70. No, not 70. What is this moving average? It's 67, I believe. 66, 67. That's your support line. That's the main support. And we've been consolidating after this breakout. Let's see what happens next week. I think we could have if this thing starts moving, if this thing breaks above 83, that's going to be a massive, massive bullish signal. That's all I can tell you. 83 cents is a key pivot. If you see this thing breaking 83 cents, you'll know something is happening big time. And after that, $1.25, then nothing till $3. No resistance. I mean, this thing can it's like a vacuum. It can just moon. And after that, it's really 750. 750. I know it sounds crazy. That's a 10x from here. Can NEXCF go up 10x from here to 750? There's no resistance. I mean, that's the chart is telling you. Forget about the fundamentals or whatever. But if something happens to make it move, it can move. And this move now is going to be easier. In other words, when the next big move, if it happens, I'm not saying it's going to happen. I'm not making any projections. But if NEXCF starts moving, a potential move to 750 would be much, much easier and happen much faster than what we have seen in the past. So that is, that is the bull case. That is why you want to keep your eye on this super stock, on NEXCF, our next super stock. All right, let me go to answer some questions. Yes, 60, 65, 67, support 67. Thank you very much. CBDT, we talked about that. PKK, I haven't seen, let me look at the PKK chart. I haven't looked at this. Yeah, I mean, oh, these trend lines, I don't know, these trend lines that carried over. Ignore these trend lines. It's crazy. Yeah, I think that PKK has basically been derailed. And yeah, we have, by the way, we haven't worked with PKK since like when was it? July. Our contract was up with them in July. So last year, I think we did one live stream with them over here. The stock ran up, and then I think they took it a little. Yeah, the stock actually could have gone to 14. I think it could have gone to $20 potentially. I think potentially it had the potential to go there, and I think I said on a live stream, hey, this thing is really like, it's $10 is really kind of that's kind of, I think that's fully valued now, potentially, because this thing has market momentum. It could go to 14 or even $20 based on that momentum, but that's not really sustainable. I mean, but the chart is the chart. So, but yeah, it ended up going to $14, $14.02, right? So $14.02. Imagine being the guy who bought it at 14.02. So yeah, but somebody always ends up buying at the top, and at the bottom, right? But yeah, I think peak is. I mean, I don't want to like get. I know this thing has has a big cult following, which part of that is a result of JJ going our program, building up that base, the cult. So I think we helped them create the cult following. But there's people who are really Kool-Aid drinkers now, and I think they were kind of angry at me when I say, hey, this thing is kind of topped out here. They're saying, oh, it's because they're not renewing their contract with you. Oh, listen, I don't want to renew a contract with a stock when it's already at $14. I don't want to be the guy holding the bag. I don't want my audience holding the bag. I want, basically, quite frankly, I want anybody who's following our super stocks, I want them to get in and get out when a stock is 10x. I don't even care if a company has a contract or don't have a contract, because they need to roll that over. I mean, the odds of a stock going up from 10x to 50x, very, very remote. Sometimes they go up 20x. But as you saw, those charts with Axon or Rick's Cabaret or MicroStrategy, or I think we've had a few others like that, it took them years, 20 years to make that 100x. So even let's look at Axon. Let's look at Axon. Perfect example, right? So Axon, I mean, it's a teachable moment, as they say, right? Okay, so Axon, the smart move in Axon would have been not to hold it to $200. That was not the smart move, even though it went there. That was not the smart move. The smart move was to get in at 50 cents or $1, whatever it was, $2, and sell it when it went to $20. You would have made 20 times your money. Okay, you would have made 20 times your money, and then you could have parlayed that 20x into another deal. Because look what happened. As soon as it went up 20x, went right down. It wasn't able to, it got ahead of itself. That's what happens with these stocks. They get ahead of themselves. And then you had to wait. Look how long you had to wait. After that, you had to wait from 2004, 10 years. You had to wait 10 years till it went back to that number. And then wait another 6 years. And this was like, we had some market mania here. So this is not, you can't expect, but it's, so these numbers are not real numbers, $200. That was market mania. So yeah, whatever happened, whatever you saw happen in the last 2 years, because look, we've had 9 10-baggers plus, 2 20-baggers, 150 bagger. And people are saying, oh, this guy got lucky. Yeah, I did get lucky, because in a normal market, the performance would have been half of that. So we, instead of having 9 stocks that went up 10x, we would have had 9 stocks that went up between 5x and 10x. That's the normal thing, or there might have been a 20-bagger. But beyond the 10x or 20x, very hard. So if you own peak fintech and you think it's going to go back to $100, and it might, who knows? I actually don't know. I don't know what's going on fundamentally. I have no idea. No idea. The stock I'm most bullish on, frankly, and again, it sounds like, oh my God, this guy's pumping, and people say, oh, this guy's, look, I'm very transparent. I tell you, I own a stock or this, or, buy it, don't buy it. Like, I don't care if you buy it or don't buy it. The thing that I like the most about NEXCF always comes down to one thing. You know what? It's very interesting. I was watching a video with a guy, Jason Calacanis. He's a big startup investor now. Jason Calacanis, angel investor. So this guy made a shitload of money. I think he made, he claims, I don't know, it's possible. He might be worth like 100 million plus now. He might be worth 100 million plus. He had some businesses that failed. He had a new magazine called Silicon Alley. Because I remember him and his brother like 20 years ago. They were like, he had this magazine, which was the guy did a great job with this magazine. And then, the .com boom happened, and the bust happened, and the thing went bust. And I actually tried to buy the assets from him, and he kind of didn't want to sell it because I wanted the email list. But anyway, what happened is then he started another, but he made some money selling some bullshit, I don't know, it was some bullshit company he sold. And he parlayed that money into startups. And he hit this guy. The guy's a sharp guy. I hardly recommend you watch his videos on YouTube. I'll tell you why. He hit 6 very small investments, like 50 grand, I think, into Uber. He put 25 grand into Uber. He was like the number 3 investor. And I think that stock, I think it went up to like, he might have made $100 million on that stock or something crazy. I mean, like some insane numbers. You got to look at this online. I think what else? Uber, what other stock did he buy? A couple of these startups. He very early investor. And he is, in his thing, he talks about something interesting, which I've talked about. It's this. It doesn't matter. It doesn't matter what the business is, right? What you want is the founder CEO. You want the guy who, it's all about the CEO quality. It's the CEO founder quality, because the business is never, you never know what the business, sometimes they start off with one thing, it pivots to something else. And you want the person who is, and this is what he talks about with Uber. He says, look, this guy Travis from Uber, he was following him for a couple of years. He had a couple of startups that kind of went, they kind of fizzled out. They went bust. And he was saying, look, you know what? On your next deal, I want to invest. This is what Jason said. And here's his reasoning. His reasoning was because this guy, even when he failed, he was just so persistent, like a pit bull, so dogged and relentless, that he knew no matter, at some point, this guy was going to have a massive win. And that's what the quality you want in a CEO. You want a guy who's relentless, who's not going to be satisfied to, have a stock go up 5x and 10x and you never hear from him. And, they get nervous, the market makes them nervous or whatever it is, like, like the ESCs, the RHTs of the world, the CBDTs. I mean, I can go through the list. These are fair weather CEOs, right? NEXCF. And listen, it's not just me saying it. You could see it for yourself, right? That's the guy. That's the guy who's relentless. And I've been saying that for years. Even when Evan and I, we've had fallings out before, right? But I said, look, this guy is really super focused guy, and when he hits, he's gonna hit. I think when this guy hits, it's going to be a legendary epic run, because this is the guy. He's relentless after the. He's grinding it out 4 years already. What is it? He went on our program, and he's had massive winners, because look at this. NEXCF was a spin out of some cockamamie cannabis company. I think Evans had some cockamamie cannabis company, which actually I think that stock went up 20x or something. I forgot the name of it. It was like, what the hell is it called? Some Future Farm or something. I don't know. So NEXCF was a spin out of this Future Farm, and this NEXCF became this massive winner, right? And now NEXCF is going to do a spin out of this the ARway, their maps business, right? The maps business, which is, I'll tell you what, I'll tell you something very interesting. If you're watching this, how big can the maps business be? Very big, because they're spinning this out at a valuation of very low valuation. So that thing could pop, and I'll tell you what the possibilities are. There's a Fugazi stock right now that's trading on the NEO. The NEO is a Fugazi kind of exchange. And this thing is completely, I mean, listen, I'm not saying it's a fraud. I'm not saying that. I'm just saying it's a bit of a Fugazi. The company doesn't have anything there. It's got a market cap of like 80 million right now, VERS. And this thing could actually pop. I think it's basically a pump and dump. I'm not saying it's fraudulent. I'm just saying it's being heavily promoted, I think in Germany or wherever they're promoting it. And it might have a little more pop, and then it's going to get shorted to shit. This thing is going to go back to, I think this thing is going to go back to like, zero, not even zero, but what does this company have? Basically, it's very similar to the business that NEXCF is spinning out, which is this AR spatial mapping business. This Verse, they don't even have revenues. I think they did like 100. I mean, very like minimal revenues. It's like I don't even know. Is it related party cap? We don't even know, right? It's minimal revenues, like no revenues. 80 million or 50 million market cap, whatever it is, right? Why is that bullish for NEXCF? It's bullish for NEXCF because that tells you that the spin out that NEXCF is doing could easily be worth the same thing. It's a direct comparable. It's a direct comp. It's almost like, hey, you're living in a neighborhood, the houses are selling for 500 grand. All of a sudden, one of your neighbors, your next door neighbor, sells his house, same exact house, for $1 million. That means your house is now worth, in theory, it's going to bring up all the values on the whole block. And sure enough, you're going to find that's what happens in markets, right? So I think when NEXCF, I hope this Verse sticks around, doesn't go bust before the spin out. Hope it sticks around for at least another month. I would say the smart move is kind of like, the smart move is to be long NEXCF and short Verse. So it's kind of like, I talked about being, it's a pair trade. It's sort of like being long Tesla and short, one of the other EV stocks like NEO. I talked about that spread before. It was like a 20-1. I forgot what it was. It was a ratio spread. I think if you're watching this and you're like running a hedge fund or whatever, you got a family office, you're more of a sophisticated investor, you might want to look at doing a pair trade, being a long NEXCF and short this Verse, because Verse has really nothing there, and it's kind of in the AR space basically, and so you're hedged basically, because if all of a sudden things take off, they're going to take off for NEXCF. But you're going to see that spread. You can make money from there. It's interesting. I always think I should reach out to Liquid. I haven't heard from them. I don't know. They kind of fell off the radar. I gotta reach out to them. anticipating 1 billion in revenues. I don't know. What are they doing now? I mean, look, I have no idea. Are they making money? It's a very different business than Upstart, I think, also. I don't know. Look, I don't know. I don't know what, because they got this business that's in China, which makes me a little bit nervous. So whatever is in China, you want to discount it very heavily. I wouldn't pay that same multiple for a stock that's based in China as a stock based in the US. So I think at some point, PKK could actually be interesting, but maybe when it gets to like 30 cents. Yeah, I think if peak drops to, I think it probably will go back to like this 70s level or even lower, like 30. I'm not saying, I'm not trying to knock the stock. I just think the way the chart is right now, there's no support. There's no market support or anything. Look, a lot of these guys, they need to become more humble. So I think once they have that experience, they're more ready for success the second time around. I think that could be the case. I think peak is going to be better once they make the comeback. I think the comeback is what you want to invest in. So I would not be touching it right here, because it's the trend is clearly down. It's clearly below the moving average. There's no question. I mean, it's so far below the moving average. It's like it's just continuing to drop like a stone. At some point, it's going to bottom out, and it might become a very good value. And there might be a great opportunity, but it's not there yet. Let me see what else is moving right now. Okay. We got AIML, one of our next super stocks, one of our favorites. And I've talked about this one. It's just flirting with this moving average. It breaks out, it's like, but the fundamentals of this company are very, very compelling in the wearables, tech space, health tech space. Amazon is investing in health tech, buying that was a Medical One, whatever they call it, $3.5 billion. That's a big deal, right? I think they're going to get more involved in health tech. I mean, I think the valuation is going to start going up in health tech because of this, and that will be bullish. What's going on with TDOC? Because that is one of the bellwethers. Oof! Wow, look at this. So this is the thing that made me nervous about the market a couple of days ago. He had this breakout above the moving average, right? Everything was looking good. Like, hey, it looks like we found the bottom. I was saying, hey, it looks like we found a bottom, and then boom, the rug gets pulled and below the 50 now. And I don't know. I mean, this thing has a bad history of gapping down and then maybe going lower after that. So the next leg down in TDOC, if it makes a leg down, it could be brutal. This thing is really, how about our other DraftKings? That one is kind of, again, flirting with a moving average. It's flirting with that line. It's not really going above it. I think it's trying to build a base, but I think DraftKings going back up will be very bullish for a lot of the microcaps. What else are we looking at? How about, oh, here's a good one, ChargePoint. This is pretty interesting. So this is a high flyer, right? It's been in this down. Look at this nasty downtrend. I mean, this is a classic downtrend. I mean, there it is. I mean, this is it. Does it get? I mean, is this trend line too subtle for you? So it's been in this downtrend, and it potentially could be breaking out. Potentially, it's above the moving average. It's technically it's above this trend line. Actually, could be lower. Maybe it could be. Yeah, I think it could have broken out above this moving average, this trend line. So it could be, I think maybe the algorithms got tripped up, and that's what happened. That's why this thing moved. Because as soon as it broke above, you know, the algorithms go crazy. There's a lot. I'm not the only guy who looks at these trend lines. There's AI systems that have all this stuff, you know, figured out. That's why, again, back to NEXCF. All road, you know, listen, on this show, all roads lead back to NEXCF, our market leader. Once it goes above 83, and I showed you the trend lines earlier, once it breaks above 83, all the algorithms are going to go crazy. So the algorithms are going to go, this is it, the 50 moving average. Once we break above 83, so we just got to wait for it to happen. When it's going to happen, I don't know. Maybe next week, maybe never. I don't know. What else is going? Yeah, so this is this is what's going on right now. All right, so enough with that. Thank you for tuning in. I will see all of you on the next live stream next week. I think we're gonna have hopefully some companies coming back. You know, I know a lot of people are on vacation right now, but anyway, happy Friday. Have a wonderful weekend. Make sure you press the like, subscribe button if you're not a member yet. Also, our Discord channel, all that other good stuff. Thank you, and I'll see you all on the next live stream.